If you've ever studied Warren Buffett or listened to one of his talks,
You're going to be looking for businesses that have enduring competitive advantage. You don't want to buy a Burger King franchise just because nobody's come within 10 miles of it yet, because you know Wendy's and McDonald's and all of those will be there pretty soon. I mean, you're going to look for something with enduring competitive advantage.
you realize right away that the types of stocks and companies that he likes to invest in are the types of companies that have a lot of cash and, most importantly, know how to use that cash to generate profits for shareholders. Now, one of the best metrics that you can calculate to know whether or not a company has a lot of cash that they can deploy to take advantage of different opportunities is the cash per share metric. So in this video, I'm gonna share with you how it is that you can calculate the cash per share metric, how to use this metric, and why this metric matters from the Warren Buffett perspective. Okay, so the formula to calculate the cash per share is very simple. You take the cash and the cash equivalents of a particular company, and then you divide that number by the number of shares outstanding. Let's calculate this number for one of Buffett's favorite companies, and that is none other than Apple. So I'm gonna use Y-Sheets to get the company's financial statements right on my spreadsheet. This works on Excel and Google Sheets, and then we're gonna go immediately to the balance sheet. As you can see, this is where we can find the cash and the cash equivalents of the company. So if we want to calculate the cash per share for the year 2023, we take the cash and the cash equivalents of the company, and then we divide this number by the number of shares outstanding. This number can be found right here on the company's income statement, and we're gonna take this number here. And as you can see, in this case, the cash per share of the company would be 190. This means that for every share that the company has outstanding, the company has $1.90 that it can spend, or it can invest in anything that it wants. This is money that is just cash that the company holds. Here are some of the main reasons why Warren Buffett loves companies that have a lot of cash or a high cash per share. So first, it's because this represents an indicator of financial strength. What this means is that companies that have a lot of cash available can use that cash so that first they can pay off their debts so they're not in financial trouble. And second, this builds into the second point, which means they can use this cash to take advantage of opportunities that they have to continue to grow and continue to increase their presence in the marketplace. The third point we already discussed, they can use this cash to pay off debt so that way they don't have to worry about that. And the last point that we have is dividend payments, and not only dividend payments, but also the ability to do shareholder buybacks. So what this means is that when a company has a lot of cash, they can use that cash to distribute that cash to the shareholders in the form of dividend payments. So maybe every quarter, every month, or maybe semi-annually, depending on the company, you might be getting a dividend payment for that particular company. And this is only possible if the company has cash to be able to distribute to the shareholders. The other thing that companies can do is to buy back shares, which generally decreases the number of shares available and increases the value of the shares available. So this is another way of providing a payment to the shareholders that Warren Buffett likes. Now, there's a few ways of using the cash per share number. So one of the ways is to look at the cash per share number on a historical basis. So right now we've calculated this number for 2023, but because we have the right formula, we can drag it across and calculate it for all the previous years as well. And generally what you want to see is a cash per share number that is growing over time, because this means that the company is being efficient at utilizing its resources to generate cash. The other way to use the cash per share metric is to take a list of companies in the same sector of industry and to compare them across a whole bunch of metrics that matter to you, with one of those metrics being the cash per share. So what you can do using Y-Sheets in this case is just simply select the list of companies, select the parameters you're looking to get, and then click on get data, and right away you're going to get all the metrics calculated for you. Once you have this, you can easily filter so that you can find the companies that have the highest cash per share, and this is information that should be factored into your investment decision. The only thing to keep in mind that Warren Buffett advises against is to invest in companies that have a lot of cash on their hands and they don't know what to do with it. And this is not good, because you want a company that has a lot of cash but has a lot of different opportunities to invest that cash to generate even more cash. So be sure to look for those types of companies when you do your own research. Now you know how to calculate cash per share and why this metric is valuable to analyze when it comes to assessing potential stocks to invest in. If you've enjoyed this video, make sure to subscribe and turn on the notification zone so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level.